Hello, trading is closed on March the 27th, 2020. Let's go over our calls. Look for the pattern with the early low. This is it. Monday also has the early low. We said there was a possibility of gapping down despite this big rally. We gapped down. We had mixed signals that we didn't get what we usually get, which is either a gap outside, a gap and a move outside the day's range, or a close little change. That didn't happen. This target didn't fill. We'll add it to the list. During the day, MEJT said this drop would retrace, said this huge rally would retrace, and it did. This is just a reminder of our last call. Well, I'm ascribing a lot of importance to the break of this trend line. We broke through it Thursday, and I said all we need to do to validate the break was to trade over yesterday's close by 1 cent. That never happened, so that break does not count. We're now under this line again. And unless that's reversed promptly, it's a serious break which should lead to additional declines. Now you'll recall we gapped over this consolidation on the 23rd, and I said when you gap over the whole day's range, it's the market's way of saying that trade doesn't really count. So if you'll take the decline prior to that, you'll see how we're stalling right at the minimum Fibonacci retracement of 38.2%. If you're going to have any bounce of any kind, you normally can get 61.8, and that might still happen. But if you stop at 38.2, it usually is a sign of extensive weakness. Doesn't mean we have to stop there, but that's where we are now. It's even possible that this is the end of wave purple 4, because wave 2 is simple. Wave 4, if that's ABC, is complex. And there's a clear Fibonacci relationship between those two waves. Of course, it could be a coincidence, but at least if we drop from here, it makes sense. When you take the 5-minute chart, you'll see you have good Fibonacci relationships all the way to this high. We don't know for certain at this time if that's the right count, but if it is the right count, we're in wave 5 down, and the impulsive nature here certainly is compatible with the interpretation that you're in an impulse rather than still in a way which is a consolidation. These things, except for this, is all overlapping, and that one really isn't. So, Monday's pattern has the early low. Typically, it's a rally day if we don't drop big early with a high in the final hour, but early weakness should lead to further weakness in the days to come. A late drop on Friday nearly always follows through into Monday's open. There's strong resistance at today's high. Unfilled gap showed there was no validation of Thursday's break over that line. Bulls must have a strong open Monday. What they need is to gap up smartly, ideally clearing recovery highs soon thereafter. And if they can do that, I still think we'll see 27.75. But if instead we drop with conviction at Monday's open It wouldn't take much to convince me we were in wave 5 down with much lower prices to come. So I think we'll know a lot more Monday morning than we know now. Those are the stakes, and that's today's call.